This is where most Bitcoin traders get trapped. And I don't want it to happen to you or me, or any of us for that matter. That was easy for me to say. Hey guys, it's Keith Allen. Yeah, we're back with the Bit Break, and this really is one of those situations where the market throwing us mixed signals, where we have the monthly close and the quarterly close coming into focus here. That's always a time where we see more volatility, and the market is punishing low time frame traders in both directions. So we're going to try and find some clarity in this chaos. We're going to look across time frames. We're going to look at liquidity. We're going to look at order flow. We're going to look at momentum. We're going to look at the structure. We're going to look at all sorts of data and see if we can narrow things down a little bit. And I would just caution you that if you're getting caught up in this and you're getting stopped out or hunted, as many people like to think, you're not really getting hunted. It's just the game, right? But if you are getting stopped out, I'm going to caution you against revenge trading and trying to fight your way back real quick, because this doesn't always work out the way that you want it to. And at least take the time to sit through this video and see if we can help you narrow some things down here. I want to quickly, before I even get into the action, share a chart to give you some perspective on where things are right now. And for my perception, this to me looks very much like a risk-off situation. You can see Bitcoin dominance still hovering near 59 and above its recent trend line, but it is coming down. And you can see total 3, which is the alts, which were rallying a little bit, but that rally has run out of steam. There's not a lot of liquidity in those order books, and they are also in jeopardy of breaking down further. And down here, ETH, the bastard child of crypto right now, really underperforming. And you can see who's the winner in all of this right now. It's stablecoin dominance, and that to me indicates a risk-off period. Before we climb into the charts, a couple of things that we have to discuss here are the fact that we do this on the regular for you guys, and it can certainly help me grow the channel by participating, and it also makes this a better analysis for you. So live chat is open. Hello, my friend. Good to have you here. And anybody else for that matter. I'm going to give you guys a couple seconds to do a couple of things for me. First, I want you to smash a like button, hit a share button, and invite some of your friends, fellow crypto traders, maybe a community that you engage with, and invite those folks into the stream and help me grow the channel. Also, make sure you hit the subscribe button so you never miss a future stream. If you like the kind of data I share and the insights I share with you, I try and really make an effort to be unbiased here and just give you my best take on the market in any given situation. And I hope you're learning something along the way. If you value that kind of content, please do me that favor and smash those buttons. Live chatting is open as always. So if you have questions, I'll do my best to address them. And if you have insights, by all means, please share them. One bit of housekeeping I'm excited about coming up on Thursday. 3 Commas and Quant Pilot have invited me to demo this new AI strategy builder and backtester, and I've been playing with it for a few days now. It's pretty freaking incredible. And so I think my first strategy, I came up with something like 131% on a mean reversion strategy, and I'm just getting my toes wet with this thing, but I'm really eager to take a deeper dive and figure out what I can really do with this, and of course see how things perform relative to that. So we're having a webinar on Thursday. You are invited to join in and ask some questions, learn about this new platform as well. If you're interested in trying it out, you can still do so. I've got a link in the description down below. It's a referral link. I'm not getting any money out of this. I think I get maybe like some extra tokens, right, to backtest with. So click that link if you're interested, and by all means, join the seminar on Wednesday, and you can ask questions and be involved as well. So good to have you guys here as always. Yali, appreciate you. Crypto Believer, always good to have you here as well. Let's go ahead and climb into the charts and get busy with what's going on. We already talked about the fact that this really does feel like a risk-off situation, but at some point this has to settle down, and we're going to see some things start to change. And we have seen that. Obviously, we have been watching the order book and the liquidity here. And there's a lot stacked in this order book right now. If we zoom out, we can see we have a really a significant amount of bid liquidity down here. There's about, I think it's about 364 million between where we sit now and that 54K range. And 54K is interesting to me for a number of reasons. If we go back in time, we can see that we did actually have a double bottom forming at that level. 54K, where was that guy? That's right about here. And this may not look like a great double bottom to you on this particular candle chart, but if we take that to a line chart, we're going to see a picture perfect double bottom here. Speaking of double bottoms or potential double bottoms, we also have one really right where we sit right now, potentially. Doesn't look so good on this time frame on the line chart, but if we go back to the candles, I want to show you something interesting here. Back in February, we hit a low around 59.9. It was 60K even on a lot of exchanges. And then here more recently, early June, we just barely wicked past that. That one went to 59.1. And the question at the time for me was, hey, is this a double bottom that's going to show us a nice bounce, or is this a lower low? And I really have been looking at this as a lower low, largely because of what the RSI had been doing at the time. And for that, I'll take you to the weekly time frame where you can again see this these two touches to the line here. And so there were a couple of things that got my attention. And in terms of treating this as a lower low versus a double bottom bounce. A double bottom bounce, you're going to expect to see price appreciate back up. Would it go all the way back up into this range? In the high 80s and 90s, that's questionable. I'll get into those targets here in a few minutes, but just something I'm noticing here on this time frame. If we got a bounce, right, we've lost the trend line here. We've lost the macro trend line. We've lost the 200-week moving average, and we've actually been flirting with it over the past month. And what's interesting, what looks bullish here, and keyword looks bullish, but not necessarily is bullish, is that we have a series of higher lows that all resolved above the 200-week moving average, right? We have this one back at the beginning of June, and then week of June 8th, week of June 15th, and here we are, week of June 22nd. We are about a week away from the monthly close, right? And the quarterly close as well. And so whether this one actually resolves above or below the 200-week moving average remains to be seen, but we can see that we already in this series of candles are making a lower low from here. Okay, so we're no longer in this consecutive series of higher lows. We were making higher lows until really the wee hours of the morning here today. So this is a sign that we could be seeing more downside. And what would be the invalidations to that? Well, there has to be a stopping point at some point, right? And a reversion. And even if it's a short-term thing, could it be right here at this prior low, right? Would it be a new lower low here if we move this now to this new low, would this be an invalidation on in terms of a double bottom bounce. If we fall through here, then yeah, I would say that would invalidate. That would invalidate the theory of a double bottom here. If price continues down here, then obviously we're looking at more downside. Something else that has transpired in the past 24 hours or so, right? So at the Sunday close, this most recent leg of the RSI, of the weekly RSI, had ticked up, and we were looking at a higher low situation here on the weekly RSI. But we're now at an intra-candle point in time, right? Intra-weekly candle, and since the RSI moves in real time, it has actually reverted back down and has, for the moment, lost the structure. It is not a matter of where we sit right now because this is an intra-candle move. It's where we close. Do we close down here? Do we close up here? So pay very close attention to this. But this was after the weekly close with this up this way, this will and I'm gonna do some bad drawing for you. So this was that's horrible. This was actually at this point, this little elbow here was headed that way at the close, and it's now ticked back down. So this can continue to move and change in real time between now and the weekly close, and that's something that we're going to continue to watch. Making a lower low would also indicate more downside coming. Making a higher low might indicate that we are forming some foundational support, and so that remains something that I'm keyed into. Looking at it on the monthly time frame, it does look like we have some consolidation and some foundational support growing here. And again, the invalidation for that would be breaking through this level, which you see has really close confluence with the 50-month moving average. And so a breakdown below this level would invalidate the idea of this being a double bottom. If we go back into lower time frames, I want to show you something. You can see here we have what looks to be a death cross developing here between the red 50-week moving average. That's not doing so good with the line tools today. Between the red and the blue 100-week moving average. And I'm just roughing it out to see if this is going to be like eminent in a week or two, because really difficult to pull out of this trajectory from here. So we could see this within the next 2 weeks. If we stay on this trajectory, then this is likely eminent. And yes, this is a lagging indicator, but it tends to pay off. If we look at it on the daily time frame, we can see that death cross has already happened. And so we could indeed be in for more downside. It hasn't really broken down deeply, just incrementally giving us a lower low here from this prior dip. So watching that as well. As we get to this monthly close, I will be looking for new trend precognition signals, and I'll also be looking for because it will be a quarterly, I'll also be looking for new timescape levels. So you can see that on the monthly, we are on a downtrend, and this obviously going to validate here, unless we get a miraculous God candle recovery. But this is set to validate here on the monthly close, and then we'll be looking for something in the 3-month time frame, on the quarterly time frame. And this one is important to me because we have we've been monitoring this from the yearly open. You can see we have a short signal on the year, which means that there's really a low probability that we'll see a new all-time high in 2026. Same set of circumstances on the 6-month candle. And on the 3-month, we're now waiting to see if we will indeed get a new signal. And what's interesting here is if we look at the A1 slope line here, the A1 slope line, and I can maybe find the button to enlarge this. Okay, so the A1 slope line is currently on an upward trajectory for momentum. And if it crosses this blue dashed line in the middle here at the quarterly open, then we could potentially see a new long signal, which would indicate that, hey, maybe we're starting to, form establish that bottom and work our way out of this. So it will be a combination of that and new timescape levels, which will print on the first of the month. We'll get the quarterly open, and then on that following Monday, the first weekly open, we'll get another timescape level. So historically, we see price kind of range between those two levels for the first week, and then we get clarity after that second week of where did price resolve? Did price go down from that quarterly open, or did price go up from that quarterly open? And that will be a clue as to whether we are starting to dig our way out, or we got to dig a little bit deeper before we find a bottom. So this really is a volatile period of time, and something that we need to watch very, very closely. In terms of what we're seeing right now, I'll take us back down into some lower time frames here. So you can see, again, we've lost this purple 200-week moving average, and we've lost these two timescape levels here, clustered around, let's see, 62,840. And so as much as I'd love to see a long scalp here, that might be a trade that we're forcing. It could happen. It could certainly pay off. And if I don't do this much, but I'll share something that I've been using a little bit lately. And that is this liquidation map. And we're kind of in a no man's land right now. Let me update this and see if we can refresh. And this is low time frame here. Okay, so we're getting closer to trying to liquidate these longs down here. And that's exactly what happened, right? We got this dip, a bunch of longs came in, and they're now in jeopardy of getting licked. So if we get this cleared, then there's potentially a nice opportunity for a long scalp. And likewise, if we can clear these, you have especially if we can make it back up to, the 64.5 level, you have an opportunity to build a short. Obviously, you need some protection in there in case things do start to pop. You need to be managing stop losses to mitigate that risk, because this thing really could pump or dump with some velocity because of where we sit in the time frame, or in the trend, I should say. I'll zoom this out a little bit and get a little bit different perspective here. And you can see a great deal of liquidity was left way up at 78.3. Is there a chance that we could go clear this and then come back down again before we establish an absolute bottom? Sure, there's a chance, but I'd be really surprised to make it that high. What I'm looking at really on the lower time frames in terms of what would make me think, hey, we put in a bottom. It's not just clearing these timescape levels here. It's moving a little bit higher. It's clearing some levels that we've spent even more time consolidating at. And I would say I get curious if we start to reclaim our most recent timescape levels from April, which and specifically that 69K level where we spent so much time consolidating, not just since February, but obviously way back from the 2021 top and the cup and handle, et cetera, all of this consolidation range. So certainly in tune to that 69K level. And the other one that we have spent some considerable amount of time with lately was the timescape here at 71.3. So if we flip these two, then I'm really getting curious about the potential for a real rally back to the yearly open, which sits here at about 87.5, and then I've got eyes on really making sure I have a long built for the long haul. A rejection from here obviously would wreck a lot of people. So those are kind of my invalidations, short term and longer term, on the way up. At the very least, I need to see 69K and 71.3K cleared to even have the conversation about a potential bottom being in. And then we need to clear that yearly open at 87.5 and not just wick past it. I mean, have weekly closes above it, and then we can say, all right, looks like we're building our way out of the bottom. I still don't think that would get us to an all-time high by the end of the year, but that's where my eyes are at the moment. Something else we can go back and look at back on fire charts is what's happening here with the order flow. And let's go back to a little bit lower time frame here, and you can see just really in the last couple of hours, we see a little bit of incremental buying here. So the fact that we have all of this liquidity stacked in this range obviously shows that there's some interest in accumulation here in this range. And I would say that the bulk of that interest is institutional in nature. And that's a good thing. That's okay. It's what you want to see. And the reason it's here is because that this just quite frankly is a valid range to consider doing that, right? The weekly, the 200-week moving average, where we sit next relative to the structure, and the 200-week MA are all valid reasons to consider. And I'm not talking about a scalp or swing trade here. I'm talking about for a longer term position where you're going to dollar cost average your way in. This is a reasonable range to consider doing that. And validations noted, of course, because if we do break down from here, it's a much longer trip to the next levels, and so on and so forth. And what's interesting, and you'll see this across social media right now, is anytime we start to pump and rally, people go, well, there's the hopium addicts that go, the biggest bull run ever starts now, and that's not the case. But a lot of other traders will say, oh, I don't think we're going as low as forecasted. And I've questioned this myself. For the longest time, I've been forecasting, or I would say, I won't even say forecasting. I've been expecting to see price move to the mid 40 range based on some structural things that we've seen here recently. That would include measured moves off of the bear flags that we had. And that bear flag now has, by many counts, at least in terms of just true technical analysis, the bear flag has kind of invalidated in the sense that it's taken longer than a normal bear flag would take, but it still obviously has those properties, and whatever you want to call it, it's breaking down now. And so that structure, just to give it, let's draw that again. I probably have those drawings saved someplace, but let's just draw it again real quick, down and dirty. There's your flagpole. There's your boom, something like that. And this is not super accurate, obviously, but you get the point, right? We're breaking down from it. And so if this plays out as a bear flag, then you would look at a measured move, length of the flagpole, And I'll probably go, let's see what that gets us from the breakdown. And that throws us down. Now it's about 48s, right? And so I like this range because of this cluster of timescape levels all kind of compressed into this range. This is all interesting to me. I think my initial target when we were, somewhere down here, had me closer to 46. So now that it's taken this long to develop, it's that target is adjusted somewhat. Nonetheless, this doesn't necessarily have to play out this way because, as I said earlier, a lot of technicians, the purists, don't consider this a bear flag anymore because it's taken so long to develop. So take that for what it's worth. Whatever you want to call it, we're still breaking down from it. So whether this target remains valid or not, we'll just have to see how the liquidity and the order flow take shape as things develop. But there's also a lot of calls for much deeper targets. There's calls for targets down in the 20s and the 30s. So nothing is off the table at this point, and we have certainly enough variables circulating around the world that could change things for us. So we just have to stay in tune to that and not rush, not speculate, but let the data tell us what things, what the most likely scenario is. What else? I had something else I wanted to share with you guys. Let me think about what that was for a second. Let's take this into lower time frames for a minute and just see if we can get some more bearing on what we're seeing right now. And this is also, an illustration of what I just talked about, right? So here's your breakdown, and it's kind of all. This makes it pretty clear, doesn't it? Right? I mean, we've lost this structure. And RSI is, we're now talking about a 4-hour time frame, right? But this, if this is indicative of how things are going, this is not looking good for bulls. So, in other words, this is not looking like a great place for long unless we can stage that recovery. If we clear these liquidation levels down below and then work our way up. So that's kind of what I'm watching on that side. Let's get back to that chart. And I'll clear out some of this noise and make it a little bit easier to see, take out timescapes. And so on the 4-hour, same situation, right? There's that breakdown. On the daily, also, you see, that breakdown is staring us in the face. On the weekly is where it gets the most interesting to me. We've had this consolidation around this 200-week moving average. Oh, now I remember what I wanted to share. It's specifically about the consolidation around this 200-week moving average, because you see what's happening here. Let's go back in history. There is a period of time that we have been watching for a long time and making a lot of references to what's happening here in 2026 to what we saw in 2022. And this remains valid as well. Look at the amount of time that we spent chopping around the 200-week moving average. This was, let's see, mid-June through August, 2 months. 2 months of chopping around this range. Now, granted, a lot of it was below that range, but 2 months just chopping around the 200, and even longer than that until we had that final leg down. This, of course, was the FTX crash. So maybe this was an anomaly. It was a black swan. Maybe we'll see something like that again. Maybe we won't. No telling. But this consolidation period lasted from mid-June all the way to October, right? And we've talked about that that Q4 being the time that the 4-year cycle is likely to play out, right? So that's very interesting to me. So do not be surprised if we spend an extended amount of time consolidating in this range. And these consolidation levels, they're important. They build strength in the structure. And we see that in these clusters of timescape levels as well. Okay, look at this. You have a cluster of timescape levels right at that range. Is that um and I've seen targets in this range. Is it possible? Yes. Is it a high probability that we go down that low? I don't think it is. I think that these levels up here are more realistic. This mid 40s. I'll stand by that call at the mid 40s. And whether that's 48, whether that's 46 or 44, nobody knows. We just have to see what happens. And of course, there's lots of calls for this range down here as well. We just have to see what's happening when we get to these levels and evaluate this and trade it level by level. So if you are looking for a long, in my opinion, that's the risky trade right now, until we see some confirmation that we're going to get a good bounce, and if it's a scalp or a swing that you're looking for, I would look for a candle close above this level, and we see where the 200-week moving average is. We could say. And the cool thing about these timescapes is they work, they're there across all time frames. So if we reclaimed the 63.3, which has really close confluence with the 21-week moving, the 21-day moving average at 63,472, then you have some breathing room for another run through the range potentially. And look where that would take us. That would take us right up to where the trend line is, where this cluster of timescape levels are that I just mentioned at 68 and 69K. So that's an interesting scenario for a long scalp or a long swing. I would be looking to see price reclaim the 200-week moving average and reclaim these timescape levels, which have confluence with the 21-day SMA. So you can make it simple and say reclaim the 21, and you've got some upside to work with. Between now and then, we're talking low risk to reward, or actually high risk to low reward on these trades from where we sit right now. Let's get another peek at fire charts and with the order flow and see, this is incremental buying happening here, right? They've purchased back less than, looks like about 17% of what they had bought in this time frame over the last 24 hours. That's not convincing, I would say, but it's also worth noting that the liquidity is thin up here, so they can't make huge orders. Right? Whales can't make big whale size orders. These brown mega whales cannot make brown mega whale size multi-million-dollar orders into an order book that doesn't have walls or blocks of liquidity that are multi-million-dollar blocks of liquidity. Look at this. 290,000, 244,000, 1.2 million, 730,000, 391, 503,000, 900,000, 890. So this is why the larger order classes aren't very active in this range, and they might start using smaller order classes to inch their way back in without showing their hand so much. Keep that in mind as well. I think we've covered some decent ground here today, guys. So I'm going to wrap it at that. In terms of downside, the targets, low time frame, I think we have the 58s and the 54s likely coming into range. And if the macro plays out the way that I expect it to on a higher time frame, it's more likely that we get into this mid 40s range right here. And I would love, I want to rebuild a short. I'm looking for an opportunity to rebuild a short to get into this trade. But where we sit right now, I just think we're at kind of a sketchy point to open that position for a short at what seems like support right here. So keep that in mind. Wait till we get some breathing room and maybe clear some of these other liquidations, and then there's probably a better setup on that short. That's where I'm going to wrap it today, my friends. Again, hope you will join me on Thursday for this Quant Pilot demo with 3 commas. So links to it are in the description down below. Make sure you grab it if you're interested in trying out that platform. I believe it's still free, but if you click that referral link, that will help me out with those guys as well. Looking forward to doing this again, guys. I promise you, if I see something developing that is urgent, I will do my best to keep you guys notified. If you haven't done so yet, make sure you join us in the Material Indicators Telegram community, because that's where the alpha gets shared first. You can click the link in the description down below, or you can find it on the X page, on the YouTube channel, and on the Material Indicators website. Come join us. It's free. All right, guys. Thanks very much. We'll do it again soon.